Welcome back. Well, let's discuss SBI Card's earnings. That's really right now one of the stocks of the day. Rama Mohan Rao Amara is now joining us. He's MD and CEO of SBI Card. Mr. Rao, good morning. Thanks a lot for joining us. Your PAT grew 84% year on year and 12% quarter on quarter. What's the outlook going forward from here?
Yeah, good morning, Anuj, and thank you for inviting me to the show. Q3 has been a good quarter. All the key business metrics improved for the company, whether it is a new account sourcing, which crossed a 1 million mark, which is the highest for the company, or if you look at the spend growth, which is like a 47% at aggregate level, both retail and corporate spends put together, or the NEA receivable growth at 13% year on year. They have all culminated in a robust revenue growth of 24% year on year. And this has also helped us in absorbing the elevated cost, particularly the spend-based cost, what we incur during Q3, and still end the operating profit with a positive growth. And of course, the continuing decline in the credit cost helps us in terms of actually improving the net profit further. So the trajectory will be the same in the sense like a credit cost wise, RBI RE accounts for just 2% of the overall portfolio. Bulk of this portfolio, 70% is performing. So remaining anyways has been recognized by way of management overlay. In addition to that, we also created a 76 crore kind of a buffer, which is more like a contingency in nature to take care of any eventuality or any adverse impact of third wave. While we haven't seen much of its impact during the initial days in January, this is more like a contingency. And we are hopeful that this robustness will continue.
Okay, Mr. Rao, just coming to you, look at the market. I mean, that's the big story today. Look at the Nifty should come up on your screen, the intraday. It's down just, I think, what, 30, 40 points? 37 points. So this is just a 1/4% lower now. And what a sea change we've had. Volatility is something which we were expecting. We already had, I think, more than enough volatility for the first hour. The Bank Nifty was the first to turn into the red, and I think the mid and the small cap parts of the market, those indices come up next, should also be something which should be closely watched. SBI Cards itself, for example, it started recovering. It's up a full 3% now as we were speaking with the management. Mr. Rao, good morning. Thanks for joining us. You did make a brief comment on asset quality. Could we see a really sharp improvement on the asset quality from here over the next couple of quarters? And what would that mean for return on equity, which the company is able to deliver?
Yeah, good morning, Prashant. Asset quality, as I touched upon, RBI RE, which had been a kind of problem for the company, has come down from 9% to 2% over a period of time. And it has happened on account of runoffs through the regular payoffs, as well as the charge-offs. So as of now, it is only 2%. And with the bulk of the portfolio performing well, we don't see much of a stress from this portfolio coming in the days to come. When it comes to BAU portfolio now, which is like accounting for bulk of the delinquent loans, but at the same level as the pre-COVID level. So presuming that actually this third wave doesn't have too much of an impact, which has been the case in the initial days, our collection efficiencies are not impacted. We are hoping that this credit cost will further come down in the days to come, which will definitely add to the profitability.
Sir, I was going through your internals and it's a very good jump that you've seen in spends per card. Both quarter on quarter and year on year, spends per card have gone to almost 17,200 rupees. That's a 30% jump year on year. And even the quarterly spends, overall quarterly spends, from an average of 20,000-30,000, it's now gone to almost 56,000 crores. Can you do better than that in the last quarter of the year? And what is the outlook on spends per card in FY23?
Yes, you are correct, Sonia. The spend per card has improved by 30% year on year. In annualized terms, based on the Q3 performance, it stands at 1,72,000 rupees, which is the highest. This has been possible on account of several things. In Q3, typically, it is a lot of festivals are there. So we launch a lot of campaigns, marketing campaigns where we offer cashback. All these programs have been received well by the customers. And that was the reason why we ended up with a 33% improvement in the retail spends. Of course, we do have segmented campaigns where we look at the customer profile, where we look at the geography, etc. This is an ongoing activity. But in terms of seasonality, Q4 and Q3, when we compare, Q3 has always been the very, very robust kind of quarter. Q4, it's slightly subdued as compared to Q3 to the extent of around 0.85 to 0.9 times spends you can expect in Q4 as compared to Q3. But having said that, the current third wave, etc., the impact has been very limited. Particularly the point of sale in some locations has been impacted. But partly it has been compensated by uptick in the online spends. And one factor we have seen all through a constant factor, whenever the external situation improves, the demand comes back in a very, very strong way. We have seen in Q2, we have seen in Q3, and Q4 should be no different from that aspect. So we hope that this momentum will continue.
Okay, fair enough. The stock, by the way, is now at high point of the day. It's seen a sharp intraday pullback. Mr. Rao, one thing to be nitpicking about your numbers is your market share. That's been, you've been losing market share, 19.2% this quarter versus 19.4% previous quarter. For a company which is out and out cards company, that's not good news. Your thoughts here?
Yeah, when we talk about the market share of spends, it had been a bit volatile. But spends, when you look at it, it comprises both retail spends as well as the corporate spends. What we have seen during the last 3-4 months is there has been aggressive action from the existing players in the corporate spends, which are more like a pass-through kind of payments with very little capability to add to the bottom line. Of course, the risk is a higher side in the corporate spends. So we are cognizant of this. We have taken steps, and that has been the reason why both retail and corporate have registered a 47% year-on-year growth. We are mindful of the risk involved. So within the risk appetite given by the board, we are playing, and we will look for a sustainable growth in the spends.
Okay, but I guess, what Anuj was also coming to is the fact that there is a lot of competition in this space right now, and it's been only intensifying in the last, couple of quarters. Is there a risk of losing more market share? However small the market share loss may be, is there a risk purely because of how much competition has been going on?
I will look at the focus on retail spends more because retail spends, despite the competition, what we talked, actually had registered a growth of 33%. And with all the key metrics in a right place, like for example, the spend per card, or otherwise the 30-day spend active rate at 52%, which is again much better than a year before. I think we have a right kind of programs to engage with the customers. We offer right products that provide a differentiated value proposition to the customers. We are hopeful that this robustness in the retail spends will continue, and we will continue our current position, which is actually the second position in terms of retail spends. That is as per the market information. While at aggregate level, the share would have witnessed some volatility. But at the retail spend level, we continue to be number 2 in the industry.
Okay, all right. We will leave it at that. Mr. Amara, thank you so much for joining us. The stock has had a big move up, almost 2.5% right now. And don't lose sight of the market. There's a massive recovery.